If you are over 65, there is a very good chance you are handing the government money you do not owe. Not a little. For a lot of people, it is hundreds of dollars every month, and some of you are owed money back right now, sitting in a government office with your name on it, because nobody ever told you to ask for it. By the end of the next few minutes, you will know exactly what to stop paying, and exactly how to claim back what you already overpaid. Now, I need to say something in the first 30 seconds that most of these videos never will. You have probably seen them. Stop paying these 5 bills. You are legally exempt. And then you watch the whole thing, and it turns out almost every single item has an income limit, and the limit is something like $22,000 a year. So if you worked your whole life and you have a modest pension or a paid-off house, you sit there and think, none of this is for me again. The programs are always for somebody poorer, and the breaks are always for somebody richer, and the person in the middle who built this country gets nothing. I see you. This video is different. Almost everything I am about to give you has no income test at all. It does not matter if you have savings. It does not matter if your house is paid off. These are not handouts for the struggling or loopholes for the wealthy. They are tax breaks written into the law for one reason. You turned 65. And the only catch is that you have to know they exist, and you have to claim them. So stay with me, because the 5th one is the biggest. And after that, I am going to show you how to claim back what you have already overpaid, going back years. Let us start with the one that just changed, because it is brand new and most people have not caught up to it. For the 2025 tax year, every American who is 65 or older gets a new bonus deduction of $6,000. And I want to be exact because I have watched other people get this number wrong. It is $6,000 per person, not 4. If you are married and you are both 65 or older, that is $6,000 each, $12,000 as a couple. It comes off your taxable income on top of your regular standard deduction and on top of the extra standard deduction seniors already get. You do not have to itemize. You do not have to do anything fancy. And there is no separate form to chase. Your tax software or your preparer applies it from your date of birth. Here is who this helps and the honest catch that comes with it. It does start to phase out at higher incomes, above $75,000 for a single person, above $150,000 for a couple. But that leaves the enormous middle, the retiree on a normal income, exactly the person every other video forgets. For a lot of you, when you stack the regular standard deduction, the senior add-on, and this new $6,000 on top, your federal income tax bill is not high. It is 0, and yet you may still be letting them withhold tax from your pension or your Social Security every month out of pure habit. The move is simple. When your return is done this year, look at the bottom line. If you owe little or nothing, file a new W-4V with Social Security and a new W-4P with your pension to dial that withholding down. You are not dodging anything. You are just refusing to give the government a free loan of your money for 12 months. One catch you should know. This bonus is temporary. It runs through 2028 unless Congress extends it, so claim it every year while it is here. Number 2 is the tax on your Social Security itself. And this one is built on a myth that costs people real money. A lot of you were told, flatly, that Social Security gets taxed, so you assume it does and you never check. The truth is it depends on a number called your provisional income, and for a great many retirees, the answer is that very little of it, or none of it, is taxed at all. If you are single and your income sits under $25,000, none of your Social Security is taxable. For a married couple, the first threshold is $32,000, and even at the very highest income levels, at least 15% of your Social Security is always tax-free. The mistake is assuming the worst and letting them withhold for a tax you may not owe. That same W-4V form controls it. If your real tax bill is low, you can tell them to stop holding so much back. Number 3 is the one with the widest range of all, and it depends entirely on one thing: which state you live in. For some of you, it is worth thousands a year. For others, it does not apply at all. Right now, the large majority of states do not tax your Social Security. Only a small handful still do, and even most of those exempt seniors below an income line. But here is the bigger one that people miss. There are states that will not tax your retirement income, not your pension, not your 401k or your IRA withdrawals. A few of them have no state income tax in the first place. Places like Florida, Texas, Tennessee, Nevada, Washington, and Wyoming. And a few others do have an income tax, but choose to exempt retirement income specifically. Places like Pennsylvania, Illinois, and Mississippi. And this is where real money goes missing, because a lot of tax preparers use software that handles 40 different states, and they simply never tick the box that exempts it. The line gets left blank. The tax gets calculated. You pay it. So if you live in one of these states, pull out your last state return and look for that exclusion. If it is blank, and it should not be, you did not just overpay this year. You may have overpaid for years. And I will tell you how to get that back in a moment. Number 4 is a tax most seniors do not even realize is a tax, and it is one of the few on this list that hits the higher earners. So listen up if that is you. It is called IRMAA. If your income is above a certain level, $109,000 for a single person in 2026, the government quietly adds a surcharge on top of your Medicare premiums. And here is the trap. They calculate it using your tax return from 2 years ago. So if you just retired and your income dropped off a cliff, they are still charging you based on the year you were earning a full paycheck. The fix is a one-page form called the SSA 44. You file it, you show them your income is lower now because you retired, and they recalculate. That single form has saved people thousands of dollars in 1 year, and hardly anyone knows to file it. And that brings me to number 5, the one I told you to stay for, because for most homeowners watching this, it is the biggest of them all, your property tax. This one is local, but nearly every state in the country has a break for homeowners over 65. And this is where I have to be straight with you in a way the other videos are not. Some of these property breaks do have an income test, but many of them do not. In Texas, every homeowner over 65 gets an extra reduction on their home's value and a freeze on their school taxes. And that freeze has no income limit at all. Your house can double in value, and that part of the bill cannot rise. A lot of states have a version of this freeze, and for the middle-class senior sitting on a home that has climbed in value for years, it is worth more than every other item on this list put together. But, and this is the whole point of the video, it is never automatic. Your county will not look at your birthday and apply it. You have to call your county assessor, ask for the senior exemption and the assessment freeze by name. Ask which ones you qualify for, regardless of income, and file before the deadline, which is usually early in the year. Now here is the part nobody else is telling you, and it is the reason I said stay to the end. Everything I just gave you is money you can stop handing over from now on. But a lot of you have been overpaying for years, and that money is not gone. The government does not just owe you a smaller bill. It owes you a refund, and there are 3 of these that almost no one ever claims. The first one, that $6,000 senior deduction was so new for the 2025 tax year that a lot of tax software was not updated in time, and plenty of preparers at the big chains never got trained on it, so return after return got filed without it. If you are 65 or older, pull out your 2025 return and look for that deduction. If it is not there, you overpaid. And you do not have to just live with it. You file an amended return. It is called a 1040X, and the IRS sends you a check, usually in a couple of months. You have 3 years to do it, so that money is still sitting there with your name on it. The second one is that state retirement income I mentioned. If you live in a state that exempts your pension or your IRA money, and your preparer left that line blank, you can amend those state returns too, usually up to 3 years back. For someone with a normal pension, that can add up to a few $1,000s coming back to you for a phone call and some paperwork. And the third one is the one that makes people angry once they hear it, because it is so unfair. When you retire, the automatic withholding that ran itself for 40 years suddenly stops working because your income is now coming from 3 or 4 places that do not talk to each other. So a lot of new retirees come up short the first year and the IRS hits them with an underpayment penalty. But there is a waiver for exactly this situation, and they will not mention it. If you are 62 or older, and you retired in the year you got penalized or the year before, you qualify. It is a form called the 2210. You file it and ask for the retirement waiver, just explaining that you retired after 62, and the penalty comes off. If you paid one of these penalties in the last few years, you can amend and have it refunded. One form. Most people never knew they had the right. So let me bring it home, because I know what some of you are feeling right now. You are thinking about every program over the years that turned out to have a limit you were just over, every benefit that was for somebody else. So hear this clearly. The senior deduction, the freeze on your property taxes, the states that do not tax your retirement, stopping the withholding on money you do not owe, the refunds for what you already overpaid. None of those care how much you have. They are yours because you are 65. And the only reason most people never claim them is that no part of the system is set up to walk over and tell you. Being legally entitled and actually keeping the money are two completely different things, and the only bridge between them is you making the call and filing the form. So here is exactly what to do this week, and none of it costs $1. 1. Call your county assessor and ask which senior property exemptions and freezes you qualify for, and which ones have no income limit. 2. Pull out your last tax return and check that the $6,000 senior deduction is on it, and if it is not, ask your preparer about filing a 1040X to get it back. 3. If you live in a state that exempts retirement income, check that the exclusion is on your state return. 4. If you recently retired and you are a higher earner getting hit with that Medicare surcharge, file the SSA 44, and if you were charged a penalty your first year retired, ask about the 2210 waiver. And if paying someone is the reason you have been putting this off, you do not have to. There are free services staffed by IRS certified volunteers, tax counseling for the elderly, and AARP tax aid, who will sit with you and find every one of these. That is it. A couple of phone calls and a couple of forms standing between you and money that has been yours all along. And if any part of this hit home, do one thing for me. Send it to one person over 65 who has spent their whole life being told the help is always for somebody else. Because this time, it is not. This time, it is for them. If you want to keep more of what you have earned, there is another video on your screen where I walk through the bank moves that put seniors on the IRS radar without them realizing it, and how to stay off it. Go watch that one next. Take care of yourself, and take care of what you built.